It is Friday, 6/2/2017, 8 p.m. Pacific Standard Time, so you know what time it is. It's time for a little bit of coin metal. And what an exciting get your ass kicked at Jiu-Jitsu Friday it was. Most certainly productive, most certainly got my ass kicked, and otherwise it was a fairly exciting day too. For those of you who have been trading the Verge, oh my goodness, what a week we've had. And last time I checked, it did not seem to be going down anytime soon. So, I don't know. It started a couple days ago or a couple weeks ago, maybe about a week ago. I think that the trend started picking back up again, and check that chart. Exciting day today on the old Verge to Bitcoin conversion. We're going to be talking a little bit about ICOs today, and of course we're going to be talking a little bit about regulation because they're the old man, the Uncle Sam is out to get his cut because apparently he's not getting enough of our skin as is. So anyway, we're going to be talking a little bit about that, but of course I want to talk a little bit about regulation and how various countries have been considering that. I got a couple of articles here stashed away and ready to roll for us. I actually got a little bit prepared today. It was just such an exciting day trading that, I spent most of the time that I had intended on doing some terraforming in my backyard just super glued to my monitor and trying to keep up with the the price, or the exchange rate, as we like to refer to it on this show. And I think a lot of people forget that is exactly what we're talking about. And I don't care if it's the quote unquote price of Bitcoin or the exchange rate for Bitcoin to Verge. We are talking about an exchange rate. We're not talking about a quote unquote price. A price is something that you and I agree to no matter what might happen over the next month on the market at large. We say, okay, for the month of June, we're going to be exchanging, 3 oranges for a half dozen eggs. And so that is the quote unquote price. Now, it doesn't really matter what's going on in the rest of the market. That is our market, our exchange rate. And so when we're talking about the price of Bitcoin, we're actually talking about the exchange rate between Bitcoin and whatever fiat currency that we may be talking about. Or there are other pairings out there. Like if you were to if you go to the exchanges, most stuff is you can trade most altcoins for Bitcoin, but there are other trading pairs. There's some of them where there's select coins that can be traded for Ethereum or Ethereum Classic. Like on Bitfinex, they've got like 8 or 9 different trading pairs that you can do just within crypto and US dollars, or their version of a US dollar. And I wanted to touch on something that's very near and dear to my heart, and that's Mr. Peter Schiff. And actually, you know what? Fuck it. We're going to do our first dances first. We're going to do our first dance and then second dance, and then we'll talk about Mr. Peter Schiff, because this is a point that I hear occasionally, and Mr. Soonrock and I happen to share the perspective on this particular subject. But when I heard it come out of Mr. Schiff's mouth, I damn near threw something at the monitor, because the man should know better. He should definitely know better. Anyway, we're going to go ahead and throw in our first dance, and it is Friday. And it was a terribly exciting day for us on crypto, so here it is. This one's off of Peace Sells, but Who's Buying? Good morning, Black Friday, here on Coin Metal. And that was a little old school Sepultura there with Subtraction. And before that we had a little bit of Prong. And for some stupid reason it didn't want to play Rude Awakening, but you got Unfortunately instead. This is as good a song. It's an excellent album all the way through, so who really cares, right? And I'd just like to take a moment and kind of step back and before we get too far up Peter Schiff's ass here. And I wanted to talk about Verge for just a moment. And, you know, I've been with this coin since Dogecoin Dark. And there have been very many adjustments to how things operate in the background, you know, since that time. You know, for one thing, we were Dogecoin Dark. For another thing, we didn't have multi-algo because we didn't actually have a necessity for it at the time. But, you know, these things kind of progress on their own, or the necessities kind of bear themselves out as time goes by. Anyway, what I was trying to get to here is, you know, we've had an increasing amount of interest in Verge. And I expect this to continue, honestly. That in the longer term, as interest in cryptocurrencies proliferates, what I envision happening is already happening in both Bitcoin and Ethereum, and that is that transaction fees are actually going to go up. And it's been my hope that Verge currency, at least for the shortest term, you know, maybe like for the next year, stays relatively low. Because one of the cool things is, you know, as far as like the exchange rate, but for Verge and Bitcoin, is that it makes our transaction fees a lot lower relative to other currencies. And so when people are looking for other ways to move their currency around, you know, they're going to be looking at us and saying, hey, wait a minute, look at this teeny, tiny transaction fee for moving this shit ton of money. It's probably a better idea to do it through Verge instead of trying to do it through Bitcoin and paying like 100 to 1,000 times more. And so, you know, I think that with that, it's kind of incumbent on us to bone up on the coin and the internals of it, because we're getting a lot of what are casually called noobs coming into the IRC chat room, and also in other social media. You know, I've been addressing a lot of people that are keenly interested in Verge as a means of transaction, and of course a store of value and an investment opportunity. And so, you know, it's like I'm feeling a little more pressure to bone up on the coin, but unfortunately I can't do every single thing out there. You know, I'm doing this show, I'm terraforming my backyard, I'm doing jiu-jitsu, and so, you know, gotta kind of spread things around. I mean, these are all things I do have to do. And so, but in any case, I'm not trying to pawn my duties as face man off on anybody. I kind of understood when I was coming into this, you know, what kind of position I was placing myself in, and I gladly accepted. In all honesty, the Verge currency people that I've hung out with on the IRC chat room, and of course Soonrock himself, these are all good people, you know, or as far as I can tell. My interactions with them have all been positive, so I don't really have anything to complain about with regard to our community. Occasionally we get a little rambunctious. We like to whip out the old chrome spray paint and witness a few people, do a little raining, talk a lot of shit, but that's what we do, man. You know, I mean, my feeling on it is that's what humans do generally speaking, so why should we deny that we're human? Anyway, so now we are going to climb right up Peter Schiff's ass, because I gotta tell you, man, it's a terrible thing when somebody as knowledgeable as Mr. Peter Schiff when it comes to economics and whatnot understands us in cryptocurrencies like so completely, how should I say it? He gets us completely wrong. It's very disappointing. It's a bad thing too. Because people listen to this guy as far as investment opportunities go. And he's still talking about us he's still talking about Bitcoin in terms of something that's going to go to zero tomorrow. That it's just some big bubble, and he doesn't understand anything about what makes this thing work. Or I would argue he probably doesn't understand anything about what makes gold work. But something more deeply concerning came out of his mouth. And this deeply concerning thing, I can see it in like a longer term when we don't have an interface with fiat at all between us and gold. We can talk about it then, but we're not there yet. Until the Federal Reserve note and the yen and all the fiat currencies are gone, and we're not using them as a measuring stick in our transactions, we cannot interface cryptocurrencies directly with any kind of other commodity. You can't do it. You can't do it. I don't know how many times I have to explain this to people before somebody like Peter Schiff is going to hear it and say, oh, he's absolutely right. You can't fucking do that. It's like this. Okay, so you're a gold miner, and you're expecting that you're going to be able to transition your gold into something that you're going to be able to spend to pay your rent, pay your operating expenses, feed yourself, so on and so forth, right? And what is that traditionally? It's your fiat currency of your nationality. So if you're in the U.S., it's going to be Federal Reserve notes. Okay? So now, you have an exchange rate that you agree on with certain marketers, and we already talked about price. You may agree to a price with somebody you're exchanging with, but chances are they're going to be operating on a more real-time price index. They're not going to be relying solely on their direct supply and demand to determine their price. They're actually going to be looking at the global market because they're going to be having to sell the gold to the global market, right? And so whatever action is happening with regard to the gold itself, on the global market, not just in your mine or your little sluice box operation, but you also have to account for what's going on with the fiat currency markets. And this is a part where so many people get cryptocurrencies wrong. Because cryptocurrencies, unlike fiat currencies, are not debt vehicles. They're representations, with regard to proof of work coins, they're representations of work that has already been done. Okay, it's like a receipt for work. We processed the transactions for that time interval. We got rewarded in coin. That is, it's proof that we actually did the work. Now, with Federal Reserve notes, there is no mechanism like that, at least that we know of, that is defining the creation and dispersal of Federal Reserve notes. And as a matter of fact, we can't even get Congress cannot even get access to the Fed's book to do an audit of their books. And that should be really concerning for you, because we're talking about the global reserve currency here. We should probably know how many of them there are, don't you think? We should probably know how quickly and how many of them are being created from one moment to the next, shouldn't we? Because that gives us a good baseline to know exactly how we should use them as far as determining the price of a physical item or a commodity or a service or something like that. But we don't. We operate under trust that our fiat currency isn't just being magic wand waved into existence, or isn't being loaned into existence and never really existed before somebody came up and said, hey, give me $1 million to the Federal Reserve, we have to trust. Now with cryptocurrencies, we don't have to trust, because when you check your public address, you can tell all the transactions that have happened on it, and when you check the address for your coins, you can see where they have been as well. So, because we're eliminating trust on that end, that's one thing that separates fiat currencies from commodities such as Bitcoin or Verge or other proof of work mined coins. So now, when we're trying to define the value of say a diamond or an ounce of gold, we have an interface between. There's like a third man in between on the transaction there. It's like, first you go from the guy who dug the ounce of gold out of the ground. You go from him to the guy that'll give him dollars, and then you go from the guy that gives you dollars to the guy that will give you Bitcoin. Okay, that's the relationship there. You're using a fiat currency in between to define the value of both. And again, it's just a big question mark. So that's why you can't relate cryptocurrencies to a commodity such as gold or diamonds, because you're not doing unless you're doing a straight transaction, and even then you're using a fiat currency as the balancing measure between the two, whether you're determining the amount of gold that you're going to give to somebody for something, or the amount of Bitcoin that you're going to be giving somebody for the gold. There's an unknown metric in there. And I think eventually we'll get to a point where we will count the time and effort to mine the coin against the actual productive capacity of a person. And that will be the defining factor of how much to pay them. Wouldn't that be exciting, right? And honestly, I think that between market interest in a coin or a project and just the rapidity of or the lack of interest over a duration of time with any particular coin or project would be enough to kind of keep people moving the monetary value around a little bit. And that would probably take care of people that are, how should I say, trying to hoard. If you hold it in, say, Verge currency, and it goes through a major dip, right? You lose a little bit of money initially, and then maybe a little bit later on though it'll pick up again. That's one of the reasons why I hodl Verge, because I expect that it's going to continue to go up pretty much in its relative value to Bitcoin. That because between utility and necessity, I expect that it will, and popularity, of course, I expect that it will continue to grow in popularity and grow in value. And so, yeah, I don't expect to be getting out of it anytime soon. Anyway, I do want to throw a little bit more music down, because I got to tell you, man, those people ragdolled me at jiu-jitsu, and I got to get a little more caffeine in me before I can go on any further. So, what should it be? Yeah, that's the only thing I don't try and pay or give too much thought to before doing one of these shows is what music to play, because I kind of like to keep it, a little exciting. I feel like it gets boring if I try and plan too far ahead, Anyway, let's go ahead and throw in some Slipknot. I'm feeling the need. Psychosocial here on Coin Metal. Alright, and that was some Annihilator there with Word Salad. And, I was watching the IRC Chan, and, it's really funny. You got people coming in, and they don't even have IDs, probably aren't even registered with Freenode, but they come in the Chan, and, we try and be helpful. We really do. We're smart asses, and we don't really take a lot of shit. But we like to be helpful, and we can all use the Google. So, if you're coming into the IRC chat room to ask something, please have bothered to use the Google first. Don't be putting all your curiosity on us. We're not all the dev. This is a coin community. We like to chill. We like to relax. And we like to keep an eye on how the coin is developing, and of course how it's performing on the market. But there seems to be like this interest all of a sudden in cryptocurrencies in a very deep and technical way. And in all honesty, I cannot help but feel very, very happy that this level of interest is happening. I'm honest here. That nothing pleases me more than that. Now, of course, we do all have similar tools with which to investigate. And of course, IRC is a very good resource. However, it's not the only resource. If you look around, you will find message boards about certain subjects. You'll find Reddits. You'll find stuff all over Bitcoin Talk about this coin as well. So, do your homework. Is it's among the credos of this show, man. I mean, come on now. And like I said, I really do appreciate that the people are taking an interest in the coin, because in all honesty, I've always believed in this coin. I've always believed in the dev, and he has not failed to deliver yet. We've had several challenges with this coin, and not just on the coin side. I mean, Cryptsy was the biggest exchange for us for quite a while, and then they fucking crashed, and that didn't help things for us at all. Fortunately, we got picked up on Bittrex beforehand, before Cryptsy took the big shit. And so that was good, and allowed for a little bit of transitioning around and stuff. I think MintPal was even around back then, too. I'm not entirely certain on that, but, We got somebody here telling us that we're the least knowledgeable crypto people on the web. Dude, oh my goodness. Oh, so silly. It is one thing to think you're educated about something, and it is another thing to bother to try, And I do appreciate that people bother to try. Like I said before, I think it's incumbent on us to fully embrace every aspect of the cryptocurrency realm, and take it upon ourselves to educate ourselves and see what the 21st century's biggest tool actually operates like. And for the guy in the IRC chat room that's talking all kinds of shit, I just like to say, hey man, relax, chill, use the Google, man. Use the Google. Anyway, I do want to get on the articles, and as I threatened, I was going to talk about ICOs, because I think this is a very interesting phenomenon. People that are no more educated than us in this in our IRC chat room are setting up these ICOs and to having varying states of I guess success. I guess that's what you call it when people throw millions of dollars at you in minutes. I mean, that's kind of exciting. Isn't that success? But I was listening to a talk by Andreas Antonopoulos, and he talked about, he was asked about ICOs, and he gave probably the most insightful answer I think I've heard yet concerning ICOs. And the person had asked something about like how quickly this group of people had amassed like $17 million or some shit like that, and like whether it was worth it or not. I couldn't remember the entirety of the question, but it's basically something of like, what are they going to do with the $17 million? And Andrew Antonopoulos said, well, given the culture of Silicon Valley and San Francisco, I'm not sure, but I know it will probably involve a lot of cocaine. I about fell out of my fucking chair. I mean, it's the most honest answer. It'll probably involve a lot of cocaine. It will most certainly involve a lot of cocaine. I mean, anything that happens in California probably does involve a lot of cocaine. But, yeah, like I said, I think that if you look back at all of the other little economic spasms that we've had, whether it be the dot-com bubble or the Linux bubble or the personal computing bubble or the housing loan bubble or the credit derivative bubble or whatever the fuck bubble, you can always find there is a group of people that they don't know a lot about it, but they're doing it and they're making a shit ton of money at doing it, and a lot of cocaine is being used. It's like, I don't know, I kind of wonder if there's a village of people or a culture of people that's like all they do. It's like they wait for the economic spasm to come, or they initiate the economic spasm, or they do something to get in on the economic spasm, and like they like set up camp wherever it's happening, and they are either like supplying the cocaine or like just doing the cocaine and like hopping from economic spasm to economic spasm, And I mean, this must fucking the ICO age and blockchain and distributed ledger technology and all that other bullshit is probably got these people just like gacked to the fucking gills, not sleeping and shit, hallucinating because they're up for 4 days, and it must be like swimming in it right now. Boats and hose, FTW. Anyway, so I caught the title of this, and it just seemed intriguing enough to jump into, or take a foray into. And this one's on Bitcoin Magazine. Welcome to the age of ICOs. And this one is written by Elliot Feeney and Brandon Green. This one was published 6:41 p.m. June 2nd, 2017. So it's pretty fucking fresh. Now, I will tell you guys, Elliot and Brandon, we do judge for scansion and grammar here, and we are harsh. Let us come on. Startups are pioneering the use of blockchain technology, and they are quickly starting to gain mainstream attention. These startups are not only changing the way we track, store, and send information, but are also creating a brand new way for smaller businesses to raise capital. This new model of funding is called an initial coin offering, or ICO. This model can also be referred to as a crowd sale or token sale. ICOs function as a hybrid model of stock IPOs and crowdfunding pre-sales that greatly reduce the barriers to entry for both investors and businesses alike, similar to Kickstarter. Instead of a stock, these innovations offer cryptocurrency-based tokens to the public specific to their own initiative. I have a few ideas for one too. These tokens can serve a myriad of purposes that vary depending on the platform they are created for. In exchange for tokens, businesses generally receive either Bitcoin or Ether and use the raised funds to pay out to their team and cover future expenses. This new model of funding has been a smashing success thus far, most recently with Aragon, a platform for creating autonomous businesses, raising $25 million in less than 15 minutes. And Brave's Basic Attention token, which met its crowdfunding goal of $35 million in 24 seconds. Holy shit, that is fucking fast. How are ICOs being regulated? Are ICOs a legal funding model? There is not yet a right answer to this question. Are ICOs legal? Says Peter Van Valkenburg of Coin Center, a nonprofit organization focused on policy issues facing cryptocurrencies. Anyone who tells you otherwise, unless they are a judge, is cutting corners, making assumptions, and they are probably a bad lawyer. ICOs are in a legal gray area. Most tokens are not quite securities, not quite currencies, and many claim not to be of an investment nature at all. Tokens and cryptocurrencies don't fill any traditional asset class. As you might expect, this fosters a great deal of uncertainty. According to Van Valkenburg, an ICO is an ill-defined category. It's a trendy new term used to describe a menagerie of very new things, tokens, cryptocurrencies, etc., and activities, pre-sales, pre-mines, etc. So new are these ICOs that no judge in the U.S. has had the opportunity to officially apply existing securities laws to these technologies. In the U.S., the process for determining whether a transaction is considered a security is called the Howey test. The first ruling by a U.S. judge on this test, as it applies to digital currencies and tokens, will have many implications, most notably whether token issuers are required to comply with the strict requirements of the Securities Act of 1933 and the Securities Exchange Act of 1934. I can tell you right now, no, because they're global and they don't just pertain to our jurisdiction, and so just leave it alone. You might as well be talking about Pokemon cards. The lack of regulatory clarity surrounding ICOs, particularly in the US, is unsettling to many and has forced innovators in this space, like Blockchain Capital, to blacklist unaccredited US investors and launch their crowd funds from places like Switzerland or Singapore, where governments already ruled that digital currencies are not securities. And for the most part, the IRS, I believe, has already defined cryptocurrencies and such as commodities. So they're not securities or currency. Anyway, continuing on. Top performing ICOs. The ICO hype is real. ICOs have proven to be incredible models for raising large sums of capital in a short period of time. Listed below are some unique projects that have raised funding via an ICO or plan to hold a token sale in the near future. The DAO, $150 million. Mobile Go, $50 million. Brave, $35 million. Storage, $29.2 million. Aragon, $25 million. Ethereum, $18 million. Cosmos Network, $16.8. God, I've never even heard of them. Gonna have to look into that. Waves, $16 million. Qtum, $15.5 million. Mysterium, $14 million. What the fuck is Mysterium? I'll have to look into that one too. Apparently it's a mystery. Note, 7 of the 10 initiatives in this list come from ICOs held in the past 3 months. Dollar values are based on Bitcoin and Ethereum valuations at the time of the ICO. The democratic access to investment that ICOs fostered is reflected also in the variety of projects that people choose to fund and participate in. Here are some of the projects that have been supported in the past, as well as a few that are coming up in the near future. Decentralized blockchain platforms. Ethereum. Perhaps the best known ICO, although at the time it was just considered a crowd sale event, is Ethereum, which raised over $18 million at the time in late 2014. The Ethereum blockchain is a distributed smart contract platform fueled by a native digital currency called Ether. Ethereum's inventor and co-founder, Vitalik Buterin, explains the concept best. Ethereum does not intend to be a Swiss Army knife protocol with hundreds of features to suit every need. Instead, Ethereum aims to be a superior foundational protocol and allow other decentralized applications to build on top of it instead of Bitcoin, giving them more tools to work with and allowing them to gain the full benefits of Ethereum's scalability and efficiency, which I heard they're losing a little bit of as of late. Ethereum's ICO was monumental for a couple reasons. It was one of the first successful ICOs in the space and laid the groundwork for how many of them have worked since. It also created the Ethereum blockchain platform, upon which many of the following decentralized applications, dApps, and projects are being built. Golem aims to create a distributed, global supercomputer using blockchain technology. On the official Golem project blog, CEO Julian Zawistowski described Golem as Airbnb for computers. What Golem offers to its users is the opportunity to rent unused CPU/GPU cycles and get paid in cryptocurrency, thereby creating a decentralized network powering true cloud computing. In November of 2016, Golem launched an ICO that they denoted as a crowdfunding campaign and raised 820,000 Ethereum. At the time of the ICO, 820,000 Ethereum was equivalent to $8.6 million. Today, that Ethereum is worth $165 million. In exchange for one Ethereum, investors received 1,000 Golem Network tokens, or GNT. The token itself will be used as a medium of exchange for computing power on the network. According to CoinMarketCap, the total valuation of GNT in circulation today is $350 million. Sounds like something you might want to get in on, or at least check out further. Qtum, pronounced Quantum, is a Turing-complete blockchain stack with a smart contract capability. With smart contract capability. Their biggest innovation is the implementation of a proof-of-stake protocol, as opposed to the energy-intensive proof-of-work protocol employed by the Bitcoin and Ethereum blockchains. Quantum has, I'm not going to pronounce that as Quantum because it's just Qtum. Fuck you. Has raised over $15 million in 5 days. Early bird investors received 115 Qtum in exchange for 1 Ethereum. That funding will be used to finish the development of the mainnet and other future upgrades. Investment platforms. The DAO. Although that... Is the DAO even still running? I mean, I heard they got like trashed. I don't know, and caused like Ethereum to split off from Ethereum Classic, or Ethereum Classic to split off Ethereum, or some weird shit like that, right? Now, let me get a sip of this. Hold on. Don't ever drink yerba mate. It's wonderful. The DAO. The DAO was the most successful crowd sale of all time. Although the author of the white paper and lead developer of the smart contracts, Christoph Jensic, doesn't describe it as an ICO. The DAO was not an ICO. It was the creation of a decentralized autonomous organization similar to a company, he told Bitcoin Magazine in a recent interview. There was no seller. The contributors stayed in control of their funds. It was comparable to a large joint bank account. In other words, the DAO basically sold ownership of itself to the masses and simply raised Ether by doing so. That Ether, in turn, would have been used to fund future projects that DAO token holders deemed investment worthy. The vision behind the DAO project, though ultimately derailed by a smart contract vulnerability, was to create an autonomous corporation. People who purchased DAO tokens would get to vote on how the DAO would allocate resources and what projects and contracts it would take on or fund. As Jensich puts it, people send Ethereum to the contract and receive DAO tokens, which gave them voting power about what to do with the Ethereum. Ideally, those token-holding investors would have gotten a portion of the profits, a dividend, from the DAO's successful ventures. Perhaps nothing better illustrates how visionary the project was than the way in which they raised awareness for the crowd sale. The planning was mostly done in the DAO Slack and on the DAO Hub forums by the community, Jensich states. Most of the publicity was raised either through social media accounts and contributors or people who liked the idea, especially those in the DAO Slack, spreading the word. Through that grassroots effort, the DAO managed to raise 12.07 million Ether in the early summer of 2016, making up 14% of all Ether issued to date. This equated to $155 million at the time of the crowd sale. Being such a successful token sale and raising so much publicity came with one major drawback. It put a target on the DAO's back. Hackers knew that if there was a way to exploit this system, a bug per se, ultimately the payoff could be lucrative. Unfortunately, a bug was discovered 2 weeks prior to the hack, and a hacker was the first to discover it, which led to approximately 3.5 Ether getting siphoned out of the system. The majority of the money was repaid to investors by means of the infamous Ethereum hard fork, which led to the creation of Ethereum Classic. I'm glad these guys actually bothered to note that. BCAP. An innovator in the field of venture capitalism, blockchain capital, BCAP, is looking to help fund the next great initiatives in the digital arena. Brock Pierce, managing partner at Blockchain Capital, describes the goal as providing the investor base across the globe with the opportunity to invest in a leading venture fund via a liquid, tradable digital token. The token represents a fractional, indirect, non-voting economic interest in BCAP's first digital liquid venture fund. The portfolio that BCAP maintains is impressive, with current investments in big names like Coinbase, Bitfury, Ripple, and Shapeshift. BCAP stands to be an accelerated force for innovation in the infrastructure of blockchain technology. BCAP's token sale met its 10 million target cap in 6 hours in April of 2017. Digix. Digix DAO was Ethereum's first major decentralized autonomous organization and first on-chain crowd sale. Digix uses 2 tokens to operate, DGX and DGD, but only DGD was offered in an ICO. A DGX token is an on-chain proof of ownership of 1 gram of 99.99% LBMA standard gold that is secured by Digix. Digix entitles its owner to quarterly rewards for DGX transaction fees. The Etherscan of the DGD crowd sale indicates that they raised 465,135 Ethereum at a valuation of $5.5 million. Today, that Ethereum is valued at over $100 million. We already covered why you can't do that. I mean, we talked at length of why you cannot. Yeah, you can't do that. I won't be surprised if somebody runs off with the gold, or the gold never existed, or you can't do that. Anyway, prediction markets. Augur, which launched its token sale in July of 2015, functions as a decentralized platform for prediction markets. By decentralizing the markets, it allows for the average person to gain access to them. This therefore creates a more accurate predictive engine due to the wider swath of people participating and investing in their predictions. What makes Augur especially innovative is that it allows the average person to make his or her own prediction market centered around the event or idea of their choosing. Traditionally, prediction markets have fallen short due to their need for volume in order to be valuable forecasting tools, illustrated Jeremy Gardner, co-founder of Augur. Having a global, unstoppable blockchain-based prediction markets platform means anyone in the world with internet can connect to Augur. An important distinction to make is that Augur itself is not a prediction market. Rather, it is an open source code atop which markets can be built. The Augur token sale used a live-action sales model in which the distribution of their coin was adjusted in real time. The amount of tokens an investor ultimately ended up with was determined by the percentage their investment made up of the total crowd sale and how they participated. How early they participated. As a part of their token sale, Augur sold reputation tokens, or REP. REP is not required to make predictions on Augur's market. Instead, owners of REP are expected to report on the outcomes of events within Augur every few weeks. Those who report inaccurate outcomes will forfeit some REP, and their forfeited REP will be distributed among those who reported accurate outcomes. Gnosis. Gnosis is a platform for creating prediction markets and is a direct competitor of Augur. However, Gnosis's ICO and business model do have significant differences. The Gnosis ICO pricing was determined using a decreasing cost auction mechanism, or Dutch auction. In a Dutch auction, purchasers indicate a maximum price they are willing to pay for no tokens, or GNO. But everyone ultimately pays the same price that is either lower or equivalent to their maximum price. Unlike REP from Augur, no tokens serve no purpose on the Gnosis platform. Instead, ownership of GNO serves as an IOU for WIZ, or Wisdom tokens, which can be used to pay fees on the Gnosis platform. According to the Gnosis white paper, Wiz tokens will also function as the payment medium for Gnosis Premium, a platform that will be actively supported by developers and allow for stable coins, customization tools, and other premium features. Gnosis will also offer free platform Gnosis Basic that will not be actively supported by developers and will have less robust user interface. Yeah, they'll leave it to you to develop that shit. Continuing. Media tokens. Kick recently entered the digital asset arena with the announcement of their own token, Kin. This announcement may signal the transition of digital asset tokens into mainstream commerce. Kik currently claims a base of over 300 million users, a figure which includes 40% of American teens. Even though Kik has such a large user base, it has been difficult to monetize their digital services and therefore innovate at a competitive level with the social media giants like Facebook and Twitter, who get much of their revenue through advertisements. As a result, it is very hard for these digital services to monetize, Ted Livingston, CEO of Kik, explained in a recent interview with Bitcoin Magazine. Those that do, these giants then turn to a copy and crush strategy where they take all of the ideas from the players, copy it, and use their much larger resources to crush the other competitors who do make it. Sounds a lot like the Chinese, doesn't it? The Kim token itself will ideally be used in a multitude of ways by different companies, including Kik, all aiming to create a digital interactive environment based on the currency. According to the Kim white paper, there are already foreseeable uses of the token in the Kik app. These include establishing VIP chat groups that require an entrance fee, payable in Kin, to enter, allowing premium user-generated content to be accessed using Kin, and allowing users to highlight their messages in groups for a fee, among many others. Kik plans to sell 1 trillion Kin during its ICO event. Kik has not yet given any indication as to when this ICO will occur. Poet, short for Proof of Existence 2.0, is a large universal ledger and platform designed to record ownership and metadata for digital creative works. Poet lets users generate an immutable ownership certificate for digital content, track and license content on the web and on the blockchain, discover new content, and verify the authenticity and authorized use of all available content. Poet is an evolution of Proof of Existence, the first use case of a blockchain that was non-financial in nature. According to Poet's business development lead, Konstantin Richter, I hope I pronounced that correctly, Poet connects creative content to a global ownership database, putting creators in charge of their source data. Poet can serve as a system of record, as a notary to attribute license payments, and to facilitate multiple different payments across different license models, territories, and content formats. Hashing, spelled incorrectly, hashing out multiple rights models and complex ownership models hence becomes literally true. Poet is a platform and a utility that will eventually enable developers to utilize the Poet catalog for new services, thus adding value to the Poet token and the network itself. The crowd sale, planned for August of 2017, has a fundraising goal of $10 million. The Poet team plans to raise 51% of their $3,141,592,653 tokens to the public in their crowd sale, with the rest allocated to the Poet Foundation, angel investors, partners, and founding team. Poet is akin to Media Chain, a recent Spotify acquisition. Although there is a lot of corporate interest in blockchain applications, Poet believes that open source communities are the future of blockchain innovation. I happen to share that belief. Brave. Brave is a new blockchain-based browser started by Brendan Eich, the inventor of JavaScript and former CEO of Mozilla. According to their website, Brave aims to transform the online ad ecosystem with micropayments and a new revenue sharing solution that gives users and publishers a better deal, where fast, safe browsing is the path to a brighter future for the open web. On May 31st, Brave had a crowd sale for their native Basic Attention Token, BAT. This token will be used for micropayments between advertisers, publishers, and users. BAT gained a lot of support before their crowd sale, evidenced by them reaching their fundraising goal of $35 million in less than 30 seconds. Holy shit. That is fucking fast, dude. Word of caution. The hype around ICOs is real and growing. While the next big thing could be around the corner, the possibility of failure for any endeavor in the digital asset world is real. Because of this, it is important to treat these opportunities with cautious optimism. Study the different ICOs carefully before reaching a decision on whether or not to invest. Many times, knowing and understanding the team behind the project is more important than the idea they are creating itself. I could not agree more. And although this was a terribly long article, I mean terribly long, he gave a lot of props to a lot of different projects and gave me a shit ton of homework to work on. I must say, Elliot and Brandon, very well written. You're kind of unique in the crypto space apparently, because a lot of people don't seem to like read their stuff aloud. Maybe all cryptocurrency people like should team up in writing articles so that they can like bounce the ideas off one another, like you guys apparently did. Very good article. Thank you very much. Anyway, yeah, as commented, that was a terribly long article and certainly chock full of investment information for us. But yeah, it's about time for some music. And I can't do better than Persistence of Time, Time by Anthrax, here on Coin Metal. And that was Meshuggah with New Millennium Cyanide Christ. That was off of Chaos Sphere. And I swear, that album, no intros. None at all. Just full force. Anyway, earlier on we had somebody in the IRC chat room wanting to ask about Verge, the coin behind it all. And so I did a little bit of digging myself, just to see if I could find it. And if you know to look up the black hole aspect, that's our privacy aspect of the coin. If you look that up, you'll be able to find the resources for it. You know, I mean, it's all over the fucking place. But in any case, there is information out there. I did post the link in the IRC chat room. I don't know. I may include it in the show, and I am recording this one, by the way. Or at least I believe I am. Yes, I am. Cool. Yeah, I had some issue where this recording program would dog out on me, and I couldn't exactly figure out what it was. But I think I might have resolved it. So I am recording. This will go up on my YouTube channel, and you know, I'm almost 100% certain that somebody actually reported the episode that I posted with Verge Dev. I don't attribute that to just YouTube finally got wise to my shit and said, "Oh my God, that doesn't fly in Canada." I don't buy it. I don't buy it at all. In any case, despite that fact, this person, whoever it was that reported me, they did me a favor. They did me a real favor, because like for some stupid reason, the recording program that I use, it doesn't pick up the music. So like if I want the music in there, I gotta like re-add it in there. And you know, I'm figuring, well, fuck, I'm not getting paid for doing it. The bands aren't getting paid for me doing it. So fuck it, I'm just not gonna add the music. And then there was no fucking problem, right? But the cool thing is now I just clip out the blank spots where there was music, and just tie it all together. And sure, the episodes are a little shorter, and so I'm sure some people appreciate that. And some people don't really like the music that I play. Sorry, man. It's coin metal. We talk about coins, and we play the metal, because that's what we do here. It's just what we do. In any case, so yeah, dig around. Look up Verge Currency Black Hole in Google, and you will find innumerable articles concerning this aspect of the cryptocurrency. And I'm doing this specifically to, address the additional interest that is coming out there with regard to Verge Currency. And I would like to, continue to exist as a resource. And so, I don't want people to be looking at this project and just because, we don't have all the fucking answers right off the bat, come in and talk a bunch of shit. That just pisses me off. The person that came in to fuck with this, I'm almost certain they're part of some fucking Slack group or some fucking trading group or some fucking group, and they just wanted to come in and talk shit so that they can go back to their friends and say, oh, those guys are a bunch of ignorant assholes. Well, you know what? Fuck you. You're a fucking dime a dozen out there, dude. If you have any real curiosity about coins and you have any kind of education in cryptocurrencies, you don't even need to come to us to find shit out. I mean, we're not like the fucking Google of cryptocurrencies. We're not here to satisfy your every whim. We're here to hang out. If we can be helpful, though, we try to be. And I mean, we can all use the Google. I mean, it is out there, and is as gamed around as the search results have been, it's still pretty good at finding shit that you want to find. So, don't come in here and fucking piss on our leg and tell us it's raining and that we're the fucking fault here. You came in wanting to be a dick, you were a dick, mission accomplished, did not get no rains, fuck off. Anyway, so yeah, bitcointalk.org. Look up, actually you'll probably find it under Doge Dark Dev, and he does have a really high rating on here. His activity level apparently is 952 posts, and yeah, he's been supporting it on there, so you can just check it out there. Anywho, I don't want to go drowning you on music tonight. But we did talk a little bit earlier about conversion rates, or exchange rates rather, and how they're often misinterpreted as quote-unquote price in the greater market. And this article is actually on marketwatch.com, which I'm always kind of tickled when the mainstream media people start talking about cryptocurrencies. It's like, yes, you're making us a reality for them too. So anyway, this particular article, 3 reasons why Bitcoin surge may not be a bubble. And now, just to let you know, I have not read this article. Okay? So, any issues with grammar or scansion, when I catch those, that's because it's in the text, and somebody didn't pre-read their shit before they hit post. So beyond that, I don't know whether or not this guy actually talked about the thing that we were just talking about. So it's kind of like he's new to the conversation, but I'm hoping that he's actually going to be smart enough to talk about things like variables in the valuation of fiat currencies, such as when the Fed starts waving their magic wand and printing out a couple $100 billion every month, how that actually affects the exchange rate of the US dollar to Bitcoin in the greater market. So, anyway, continuing on. Let's get back to the title so I can see it. 3 reasons why Bitcoin surge may not be a bubble. And this one is by Victor Reclatus. That's kind of an unfortunate name for somebody in crypto, dude. Sorry. Anyway, Victor, we will be watching your grammar. We will be checking to make sure that you actually read this thing before you hit post or submit or whatever the fucking button said. Anyway, continuing on. While Bitcoin has been on a tear, don't call it a bubble. So says of2minds.com financial blogger Charles Hugh Smith in his latest post. Below are 3 key points from Smith's take on the hot virtual currency. Number 1, Bitcoin has an actual purpose. Cryptocurrencies are not like beanie babies because they have utility value. Namely, they facilitate international payments for goods and services, Smith says. He is hardly alone in making that point. The Economist notes that Bitcoin, BTC USD, is down 0.63% or 0.63%, aspires to be a means of exchange like the dollar. DXY is down 0.55%, rather than just a form of digital gold. Gold is a 0.74%. Chinese investors have used Bitcoin to get money out of that country and are seen as helping drive its price higher. More from Smith. This chart predicts a perfect storm of economic crises. It's a WYSIWYG market, not a scam. The primary cryptocurrencies are based on transparent rules that are not a scam, says Smith, whose take served as our need-to-know call of the day. It's a what you see is what you get market, he writes, using a computer term that is abbreviated as WYSIWYG and pronounced WYSIWYG. That means that both the buyer and seller know all there is to know about the exchange, Smith says. That's not true of rackets like offloading a package of toxic mortgages as a mortgage-backed security. 3. Everyone hasn't piled in. The pool of potential buyers is thousands of times larger than the pool of present owners, Smith says. Yes, that does sound a bit like cash on the sidelines line that stock market bulls like to use, but hear him out. Bubbles occur when everyone and their sister is trading/buying into a hot market, the blogger says, while a few of my global correspondents own/use the primary cryptocurrencies, and a few speculate in the pool of hundreds of lesser cryptocurrencies. I know of only one friend/relative/colleague/neighbor who owns cryptocurrency. Many big institutional investors could start adding Bitcoin as a core holding, he writes. Go here to read his full post. And you know what? We may just do that next. Let me check something really quick here. I was talking about the guy earlier. Cool. All right. Anyway, and read more analysis. Okay. So apparently that's the end of that article. Very short and pretty dependent on other people's information. Solid information, but no, he didn't talk anything about what we mentioned with regard to the exchange rate to fiat currencies and the lack of confidence that this migration into cryptocurrencies is clearly conveying. I mean, really, one of these ICOs cracked, what was it, like 30 million in 30 seconds. That's $1 million a second. Come on now. That's outright desperation, people. Desperation. That's so far beyond hope that I don't know that there's been any ICOs that have, or IPOs or any stock in history that's had that kind of jump. I mean, like maybe like Metallica ticket sales back when they were touring for Master of Puppets or something like that sold that quick. But Jesus Christ, $30 million in 30 seconds. That's fucking incredible. And like I said, it's complete desperation. Whether or not it will actually pay out, that remains to be seen. But in all honesty, I would rather things stay the way they are. SEC, all you guys, CFTC, just stay out. Just, be investors. Create some sort of quote unquote trusted token, that use these tools as what they're designed to be, Design your own fucking coin. Design several coins. Disintermediate several departments of the federal government. I mean, wouldn't that be cool? That would save people a shit ton of money. Come on, Dawn. You know who I'm talking to here. Anyway. I try really hard not to make specific claims with regard to cryptocurrencies or whether or not they're going to rise in value or whatever. You know what? We don't know. We don't fucking know. I'm sorry. I don't care how knowledgeable you are in cryptocurrencies. You don't fucking know. You can say, I think a lot. You can say, according to previous data, but you don't fucking know. You don't know until tomorrow when it actually cashes out, or your sales orders clear, or something like that. It defines what you know and what you don't know. and what you don't know is a lot more than you know. And I openly acknowledge that about myself. I'm ignorant about a lot of things in crypto. I am. Maybe more ignorant than I should be given the duration of time I've actually been involved in this space. But I'm a lot more knowledgeable than 99.999% of the rest of the fucking planet about this stuff. And I can take some sort of pride in that, I think. But the fact of the matter is that the only thing that separates me from them, or me from you, or me from anybody else, is the fact that I've actually done some reading, I'm actually done some investing, I've actually done some mining. These were all experiences that I chose to endeavor in. And that's how you truly find out about shit. You don't learn shit from other people telling you. You gotta fucking get in the pit. Any case, it's with that in mind that I came across this, and I just clicked on it just to do it. Oh no, this is that guy, Charles Hugh Smith, blogspot.co.uk, and already he's kind of lost my confidence just a teeny tiny. See, I expect that if we do the logical thing with regard to Bitcoin, and just do a straight up 2 megabyte block increase without all this UASF, without all this segregated witness bullshit, just straight up 2 megabyte block increase, block increase to 2 megabytes, not 3 megabytes, 2 megabytes, that we will see a minor depreciation in price, but that the overall trend will even out more. I'm looking at this guy's chart, and it's got a bunch of hoopty-doos in it, right? But it is generally in a significant upward trend. Now, with regard to the little hoopty-doos, things like Mount Gox and all that other bullshit. I'm going to read this guy's analysis, but I can tell by looking at it right now, he's only focusing on the Bitcoin side of things, that he's not really anticipating what's actually going on the fiat side. And I've actually indicated this to a few people that they understood what I was saying, and then the vast majority of them don't. I imagine sometime in the future when we experience a major inflation in fiat currencies, like a major one, where gas goes to $5 a gallon and shit, that it'll suddenly come home to people what I've been saying with regard to this. But when you're looking at the Bitcoin chart, you have to keep in mind what was going on with the US dollar at the time. Like when you're looking at that first huge spike where it shot up above $1,000, that was coinciding with the Federal Reserve announcing that they were going to engage in QE forever, meaning that they had no end in sight on their plans with regard to stopping or slowing down the distribution of additional funds via quantitative easing into the markets. Okay? And that just sent a fucking shockwave into the market with regard to a lack of confidence in the US dollar. And what a lot of other people discount is what was happening in other markets, other commodity markets. Okay, like oil. Fucking gas shot up in price because oil rose in price. Because everybody's like, oh, well, fuck. You know, clearly it's going to be more expensive to buy oil in the future as long as the Fed keeps printing more US dollars or Federal Reserve notes. Because they don't actually print US dollars. Read the fucking thing. That's what it says. Federal Reserve note. Anyway, they're like, I'm not going to be able to buy as much oil tomorrow with the dollars that I have today, so I better buy it now. And it happened in art too. Now, I think that most of the people that have the money at this point are like major investors, bankers, so on and so forth. They're not people like you and me, okay? And so they don't want to convey the mania out into the real market. And so what they do is they invest in things like real estate and fine art and whiskey or fine whiskeys or vintage whiskeys or vintage liqueurs or firearms or cars, baseball cards, anything that is a potential retainer of value that will exist on the other side of the economic hiccup that the rest of the planet is going to experience. Okay? Now, when the dust settles and shit, there's only so many things that you actually have that you will be able to exchange for whatever the currency unit is of the time. Okay? And so with regard to Bitcoin and cryptocurrencies, I think that's where we make a kind of a difference, that as long as there's electricity on the planet, which will be a lot longer than we have Federal Reserve notes, we will have Bitcoin because we'll be able to mine it. And that's assuming, of course, that this whole UASF thing doesn't turn out like I think it'll turn out, where they'll end up splitting the coin, and I think that the UASF segregated witness chain will die really quickly, but that'll cause issues with regard to the value of Bitcoin on the open market because its continuity will have been disrupted in a major way. And I don't really think that the people that are trying to foster this move are really thinking that far ahead. But in any case, let's get back to this dude's article. This is charleshughsmith.blogspot.co.uk, projecting the price of Bitcoin. The wildcard in cryptocurrencies is the role of big institutional money. I've taken the liberty of preparing a projection of Bitcoin's price action going forward. Projected chart of Bitcoin. Bitcoin is a bubble that's going to burst. It's a fad. It's a scam. It's going back to $100. See, it's crashing. Bitcoin is a bubble that's going to burst. It's a fad. It's a scam. It's going back down to $1,000. See, it's crashing. Bitcoin is a bubble that's going to burst. It's a fad. It's a scam. It's going back to $3,000. See, it's crashing. Bitcoin is a bubble that's going to burst. It's a fad. It's a scam. It's going back to $10,000. That sounds about right. Because the exchange rate he's talking about, again, is Federal Reserve notes to Bitcoin. Bitcoin is deterministically created, and that's currently. And Federal Reserve notes are created with the wave of a magic wand. So, there you go. That's why that happens. And plus, there's only ever going to be 21 million of Bitcoin, and we have no idea how many US dollars there are out there. So, yeah. That's why that happens. Continuing on. You see, the primary dynamic is continued skepticism from the mainstream, which owns essentially no cryptocurrency and conventionally views Bitcoin and its peers as fads, scams, and bubbles that will soon pop as price crashes down to near zero. Skepticism is always a wise default position to start one's inquiry, but if no knowledge is being acquired, skepticism quickly morphs into stubborn ignorance, which I've seen a lot of. Bitcoin et al. Are not the equivalent of Beanie Babies. Cryptocurrencies have utility value. They facilitate international payments for goods and services. The primary cryptocurrencies are not a scam. Advertising a flawless Beanie Baby and shipping a defective Beanie Baby is a scam. Advertising a mortgage-backed security as low risk and delivering a guaranteed to default stew of toxic mortgages is a scam, but every fucking bank on earth engages in it. The primary cryptocurrencies, Bitcoin, Ethereum, and Dash, have transparent rules for emitting currency. The core characteristic of a scam is the asymmetry between what the seller knows, the product is garbage, and what the buyer knows. Gosh, this mortgage-backed security is low risk looking at the rating. Both buyers and sellers of primary cryptocurrencies are always in a WYSIWYG market. What you see is what you get. While the Beanie Baby scam might use cryptocurrencies as a means of exchange, this doesn't make primary cryptocurrencies a scam, any more than using dollars to transact a scam makes the dollar itself a scam, although it is a scam. Bubbles occur when everyone and their sister is trading/buying into a hot market. Bubbles pop when the pool of greater fools willing and able to pay nosebleed valuations runs dry. In other words, when everyone with the desire and means to buy in has already bought in, and there's nobody left to buy in at higher price, except for central banks, of course. At that point, normal selling quickly pushes prices off the cliff, as there is no longer a bid from buyers, only frantic sellers trying to cash in their winnings at the gambling hall. While a few of my global correspondents own/use primary cryptocurrencies and a few speculate in the pool of hundreds of lesser cryptocurrencies, I know of only one friend/relative/colleague/neighbor who owns cryptocurrency. When only one of your circle of acquaintances, colleagues, friends, neighbors, and extended family own an asset, there is no way that asset can be in a bubble, as the pool of potential buyers is thousands of times larger than the pool of present owners. I discussed the network effect last year. The network effect, jobs, and entrepreneurial vitality. The network effect is expressed mathematically in Metcalfe's law. The value of a communications network is proportional to the square of the number of connected devices/users of the system. The network effect cannot be fully captured by Metcalfe's law, as the value of the network rises with the number of users in communication with others and with the synergies created by the network of users within the larger network, for example, ecosystems of suppliers and customers. In other words, the network effect is not simply the value created by connected users. More importantly, it is the value created by the information and knowledge shared by users in subnetworks and in the entire network. This is the Smith corollary to Metcalfe's law. The value of the network is created not just by the number of connected devices/users, but by the value of the information and knowledge shared by users in subnetworks and in the entire network. In the context of the primary cryptocurrencies, the network effect and the Smith corollary to Metcalfe's law is one core driver of valuation. The more individuals and organizations that start using cryptocurrencies, the higher utility value and financial value of those networks/cryptocurrencies. In other words, cryptocurrencies are not just stores of value and means of exchange. They are networks. The true potential value of cryptocurrencies will not become visible until the global economy experiences a catastrophic collapse of debt and or major fiat currency. These events are already baked into the future, in my view. Nothing can possibly alter the eventual collapse of the current debt/credit bubble and the fiat currencies that are being issued to inflate those bubbles. I happen to share that perspective. The skeptics will continue declaring Bitcoin a bubble that's bound to pop at 3,000, 5,000, 10,000, and beyond. When the skeptics fall silent, the potential for a bubble will be in place. When all of the former skeptics start buying at any price just to preserve what's left of their fast-melting purchasing power in other currencies, then we might see the beginning stages of a real bubble. The wild card in cryptocurrencies is the role of big institutional money. When hedge funds, insurance companies, corporations, investment banks, sovereign wealth funds, etc. start adding Bitcoin at all as core institutional holdings, the price may well surprise all but the most giddy prognosticators. The network effect can become geometric/exponential very quickly. It's something to ponder while researching the subject with a healthy skepticism. If you found value in this content, blah, 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 yeah. Very good. Very good. I gotta say, it's a tasty little article there. But, again, he only talked about the relationship with fiat currencies with regard to when the greater public at large will understand the utility of publicly mined and fully transparent cryptocurrencies. And I mean, I share that perspective, but again, that's only just one little finite aspect of it. The greater aspect of it at large, of course, is how the distribution of coins versus the distribution of fiat currencies will impact the greater economy. Meaning that when we actually do have the collapse, that people are going to be looking at cryptocurrencies in terms of which ones they can use best, which ones that there are plenty of. And I happen to believe that Verge currency will fit within this category. That in the greater term, if we keep going like we are, in the greater duration of time, we will be one of those cryptocurrencies that are used as a daily currency, meaning that you will be getting paid in Verge, and you will be paying other people in Verge, and you will be buying things in Verge. But again, it's only because you won't be able to spend Bitcoin. It'll be too expensive to spend Bitcoin. You'll have to convert it over to Verge or a smaller cap coin just to be able to afford the transaction fees. And I talked a little bit about that earlier, how Ethereum and Bitcoin are both seeing this huge jump in the amount of their transaction fees, and how I see that affecting the greater crypto market as a whole. I think that, again, in the near term, maybe a year or two, after the dust settles with all this bullshit, after we start understanding that as the demand for cryptocurrencies and the use of Bitcoin increases, so must the block size. And I believe that if we continue on the way we're going now, where anybody can fire up some miners, point them in a pool, and get in on the action without a fucking permit or a fee or a registration or a license or any of that other bullshit, that what is going to happen is we're going to see another jump in mining, we're going to see another jump in bandwidths as a necessity to facilitating the 21st century economy. That we're going to get back down to brass tacks when it comes to network creation, network distribution, who actually is monitoring it, who's actually running it. I think that's going to be up for grabs in a very short period of time. And I actually have an article that I want to touch on that may or may not satisfy my expectation with regard to this, or at least provide us with a base idea of what I'm talking about. I could be off in the bushes on this one, but I don't really think I am. I think that the internet is, as it currently exists, ending its utility as a means of communicating with one another and starting to turn into just a big fucking commercial. You know? It just feels that, you know, it's being overrun by people that want to stay relevant and want to keep the money coming in, but that don't really deserve it, because the quality of content that they're producing or interested in producing is no better than the previous content that they were producing. So anyway, I want to touch back down to some music, and then we will get into some more articles and touch on some stuff I think is kind of important here. And so let's go ahead and throw down some old school Metallica here, Master of Puppets, here on Coin Metal. And that was Prong with Without Words, off of their latest release. That was X No Absolutes. And of course, Tommy is just such a busy guy with regard to music. He's currently, I think, working with Glenn Danzig on his next release. And then I believe he's either still touring or doing the European leg for No Absolutes. He's touring around with Testament and Sepultura, I believe. And then he will be going on to releasing No Absolutes, which supposedly will be sometime in July, so a month away. I don't know. The man is prolific, but we'll see. You know, I mean, I don't know what to expect, because, like I said, he's been cranking out almost an album a year for the last 4 years, and most guys, with regard to their music careers, are slowing down at this point. And you know, he just seems to be on this meteoric run where if he's not involved in his own shit, he's involved in somebody else's shit, and it's it's all happening now. Anyway, we talked a little bit about ICOs and the dangers and pitfalls they could represent to all of us involved in cryptocurrencies and beyond. And this latest article that I wanted to touch on here is on CryptoCoins News. And just to let you guys know, if I'm not really planned forward on what I'm going to touch on in any given episode, I kind of meander a little bit. So you'll just have to excuse it. It's what I do. Anyway, so CryptoCoins News, ECB President, that's European Central Bank, there's a constant need to monitor blockchain tech. And this is by Rebecca Campbell on what? Jesus fucking Christ. Never mind. We're not even gonna bother. This is fucking February. Jesus. You know, you'd think Google would actually bring up on the first page the most recent articles, but no, you actually have to designate that you wanted to pull something that from this week, or 24 hours or something like that. Unfortunately, I didn't bother to do that filter. I'll be sure to check the date on something before I go diving into it. Jesus Christ. The last one that I was... You know what? I just now remembered what it is that I wanted to touch on. And my apologies. I have so many tabs open in my browser that whenever I open something up, I display something else. We're done with this thing, though. We got done with that. Where the hell is this thing? There was a... here it is. This one I think is really important, and especially for us in cryptocurrencies. Because I believe this is going to be the future of the internet, and it is going to be the future threat to the current telecommunications giants. Anyway, here it is. This one is on nowhere.net, Mobile Ad Hoc Mesh Network, Serval Mesh. And this is under Cypherpunk and Networking. Mobile Ad Hoc Mesh Network, Serval Mesh, and it is free software that allows smartphones to communicate even in the face of catastrophic failure of cellular networks. Serval Mesh allows people to make voice calls, send text messages, and share files with other Serval Mesh users without requiring infrastructure like satellites, cell phone towers, Wi-Fi hotspots, or radio repeaters. The primary motivation is to provide resilient communications during crisis and disaster situations when vulnerable infrastructure like phone and cell towers and mains electricity are cut off. Serval Mesh is also useful for remote communities who lack conventional telephone services, small organizations who need an internal telephone system, and dissidents in oppressive countries that deny or monitor their citizens' telecommunications, which I'm pretty sure that's all of us, actually. Serval Mesh can use the Wi-Fi capabilities built into Android to connect with other devices within range. This requires a nearby access point or turning on the portable hotspot feature of one device. On some devices, Serval Mesh can use ad hoc mode to communicate directly with other devices within range, allowing communications to be easily relayed over multiple hops. To do so requires root permission on the Android device. Simply put, Serval is a telecommunications system comprised of at least two mobile phones that are able to work outside of regular mobile phone tower range, due thanks to the Serval app and Serval Mesh. Some of the most exciting benefits of this are: communicate anytime. Mobile phones stop working when cellular infrastructure fails. The Serval Mesh changes this, allowing mobile phones to form impromptu networks consisting only of phones. This allows people nearby to keep communicating when needed most. Communicate anywhere. Cellular towers are not available everywhere. In Australia, for example, around 75% of the land area lacks mobile coverage. Letting mobile phones form standalone networks provides a cost-effective solution for communities in these remote areas to enjoy mobile communications. Communicate privately. In this modern world, private communication with friends, families, and service providers is vital, whether discussing medical issues or other private subjects. The Serval Mesh is built on a foundation engineered to support security. Voice calls and text messages are always end-to-end encrypted using strong 256-bit ECC cryptography. Encrypted calls work even on low-cost Android phones. Communicate with people. The Serval Mesh is about enabling people to communicate with one another regardless of what circumstances may befall them or where they live in the world. Because at the end of the day, relationship with one another is what life is all about. Supported devices. The supported devices page lists all of the Android devices that have been tried with Serval Mesh. And I'm not going to go through the installation instructions or the software. But I think this is pretty fucking cool, because this is the kind of thing that I anticipate we will need in the future. That the monitoring of networks will get to such a point where using the regular internet is no longer actually a viable option. And it seems like, I did an episode about this on Wednesday, and I made a really big mistake and I forgot to record it, but I wanted to call it, I learned it from watching you, Dad, and it's the idea that the basic premise of it was that this whole migration toward surveillance and tracking everybody's metadata and whatnot, this is being brought about by people asking for this tracking. Okay, and people are asking for this tracking because they're trying to get market advantage over other people. Other people in their industries. And governments are most interested just to monitor people, make sure the winners are still winners and losers are still losers, and everything still washes out that way, right? Or at least that's the way it seems. Point being that the internet is being utilized to that extent, with that mentality more and more as days go by. And when you hear the proposed use of some of these quote-unquote blockchain technologies, you really got to wonder exactly how far this whole tracking business and monetization business is actually going to go. Really, at what point will you be having to pay Google to do a search for you? At what point will you have to pay your browser to open for you? Really, at what point will you have to pay just to be able to use your own computer? Because otherwise your CPU and your GPU and all that other shit are going to be tied up paying off your debt or whatever. You're not even going to be able to use your internet connection. Not for anything useful for you. But I see more and more of these mesh networking options becoming available to the public. And I believe that a combination of these and quote-unquote black cell phones will be kind of a, how should I say it? Will be kind of a jump point for, I think, a lot of people. I think that we're going to be just jumping off of the standard internet and creating our own ad hoc networks that aren't as prone to monitoring and aren't as susceptible to surveillance as the open internet is. And whether it'll actually touch back to the regular internet, I don't know. I think that it'll probably interface with the internet as loosely as possible, but I think that would kind of defeat the whole purpose, and that just transitioning cleanly away from the open internet would be the best option. But like I said, I really think that this is going to be the development, or this is going to be part of the development of what really takes us into the 21st century, is small independent networks between communities that are allowing them to interface with one another in such a way that they can sustain themselves, not everybody's going to plant tomatoes, but somebody in your community can probably grow better tomatoes than you can find on the shelf of any store. What if you had eggs that, nice golden brown eggs or something like that you can't actually get in most stores? You can set up an economy between the two of you and exchange with others that happen to have things that you want. And in that way, I think that this progression, this dispersion pattern will continue. And I think that these mesh networks will be the backbone that it occurs on. That, like I said, I think that the internet as a whole is starting to lose its utility as it's costing us too much in personal privacy and liberty just to be worth it, and it's not being worth it is what I'm saying. Anyway, back one more time for one short article here. Yeah, it's a nice short article. And this is touching back again on the subject matter of governments and their interface with the crypto community in general. And so here it is. Bank of Canada decides it's too early to adopt blockchain technology. This one was written on May 29th, 2017 by Gautam? Whatever. Bank of Canada has decided to wait longer before implementing blockchain technology to interbank systems. Read more. The potential of blockchain technology to revolutionize the existing financial infrastructure has influenced many banking and financial institutions to invest considerable resources in developing and implementing it into their operations. With many collaborative efforts underway, the international banking industry has met with a large success in this regard. But apparently, it is not enough, says Canada's central bank, the Bank of Canada. Last week, the Bank of Canada had decided not to incorporate the blockchain-based solution into the country's interbank system. The decision was taken after conducting an in-depth inquiry into its feasibility and other implications. The senior deputy governor at the Bank of Canada, Carolyn Wilkins, made the central bank's view public in a recent article which was published in one of the country's leading news publications. The piece was co-authored by Jerry Gates, the president of Payments Canada. The research into blockchain technology was carried out by both entities, along with other banking institutions in the country as part of the R3 consortium. With a focus on the wholesale payment system, the project codenamed Jasper showed that it is indeed possible to upgrade wholesale payments process using distributed ledger. However, the central bank believes that it is too soon to shift from conventional systems to distributed ledger-based solutions due to the presence of various hurdles. According to the authors, the hurdles include lack of privacy when it comes to certain private ledgers, e.g. the Bitcoin blockchain, an emergence of the risk of a single point of failure encountered after fixing the privacy issue, and the balance between scalability versus resiliency. Secure and stable blockchains like the Bitcoin blockchain is faced with scalability problems, which limits the rate of transactions. At the same time, other blockchains that support faster transaction rates were found to lack robustness and integrity of the Bitcoin blockchain. In the current situation, the banking institution is faced with a catch-22 situation where it will have to compromise on one aspect in order to benefit from the other. The current scenario has forced the Bank of Canada to push adoption of distributed ledger technology by a couple of years until blockchain-based interbank systems meet the requirements of safety, security, efficiency, and resiliency as per international standards. However, the Bank of Canada's decision is not going to impact further work or implementation of blockchain technology by other banks. The sector will continue testing new applications, running pilot projects, until they perfect the solution. No, they won't. Oh, not bad. Not bad. And Gotham has an eye for anything new, blah, blah, blah. Yeah, whatever. Yeah, dude, I think I think they're kind of stupid. But, hey, who am I? I think they're smart for avoiding blockchain technology, and I don't know, maybe they've been listening to this show. Because I've stated multiple times that blockchains and blockchain tech are the anathema of central banks and governments, because both of these institutions rely partly on deceit and knowing more than the public. Well, if everything's on a blockchain, the information will be disseminated to the public. And I don't care how mutable your blockchain is, if some of the record is put out there before you are able to mute it or whatever, there's a potential that there could be a massive run on their central bank. And that's something I'm sure they're trying to take into account. With regard to stability and whatnot, I really think what that really means is they're trying to figure out the regulation model that will kick the vast majority of people like you and me out of the development of all the innovation going on. That will either be hired, corrupted, killed off, slandered in the public, arrested for some stupid shit, whatever. That all of these means will be used to knock out people that aren't institutional players, that do not send lobbyists to Washington or Quebec or wherever the fuck the government involved gets their bribery funds from. But with regard to trepidation with blockchain, yeah, I expected this, and I expected to continue that. Like I said, because banks and governments have to, they use duplicity and deceit specifically to get shit done. I mean, really, how are they going to be able to get shit done when it's quite clear they don't have what they say they have, as far as liquid capital or whatever, to pursue a particular, proposal. It's just like this UASF bullshit. The whole reason they're even trying to do that is because only 30% of the miners out there actually want the changes that they want put into Bitcoin. And so their whole idea is they want to create a bullshit constituency of miners to basically seize the longest chain, and take control of the network. I know that sounds really like kind of Alex Jonesy and whatnot, but you really, if you just look into the paperwork behind segregated witness, which is what they're trying to force on the network, and in the Lightning Node white paper, you will understand, that they're trying to corral the whole mining aspect of cryptocurrencies into shit that you need licenses, and into realms that already have regulation. And as long as we maintain it as is and push a little bit further at decentralizing shit, I think that they will continue to run into this issue where they're not able to get enough of the constituency to support these changes. And in all honesty, I really hope that UASF fails. And I hope that we do a simple increase on blocks, and that we get over this fucking kerfuffle, and that the next time that we actually do a halvening, that somebody has taken the time and effort to implant in there an automatic upgrade in the block size. Because we have to remember, Moore's Law is actually on our side. The changes that we're talking about that Bitcoin needs, these changes were due like years ago, a couple years ago. We were supposed to have like 2 megabyte blocks at the last halvening. If we'd had 2 megabyte blocks back then, we wouldn't be where we are now. In any case, we're winding up to the end of this episode, and as usual, I'm kind of stuck with regard to what exactly to play for our last dance. Got entirely too much prong. Already played enough of it here on this particular show. So I think I'm going to close it out with some Overkill, because they're always good for that. And what the fuck? I see this thing as nothing but trouble, so that's what's going to be our last dance for the evening. Goddamn trouble. And so we will be back Monday, 8 p.m. Pacific Standard Time. I want to thank all of you for listening. We had a peak listenership of 93 listeners tonight. That was awesome. Awesome. I'm sure it's because the coin is just jumping through the roof right now. I'm not going to even bother to take credit for it, but I love that many people actually bothered to tune in. Anyway, thank you very much for listening. And until Monday, I want you all to trade safe. Because there's a lot of action going on out there, but if you don't watch it, you can get wrecked. I want you to do your homework. Because, as knowledgeable as I am about this shit, I don't know everything. And so the Google is your friend, man. The Google is your friend. Sometimes. And watch out for your own bunghole. Because no matter how sophisticated they make Google, it can't see that or cover that for you. In any case, thank you all again for listening, and y'all have an excellent evening.